Let's go ahead and jump in. So I want to provide an update on the CPI report. I do tend to do that after we get it, just so we are aware of where inflation is. The reason why we track it is because there are previous examples where we had multiple waves of inflation. There's also previous examples where we ended up going into deflation if the Fed went too high for too long. And so really the question that I think a lot of people are asking themselves this year with regards to inflation is, has the Fed done enough to get inflation back to the 2% objective? If they haven't done enough, then they run the risk of pivoting too early and going back to looser monetary policy too early, and then we run the risk of a second wave of inflation. The other side of the story, though, is what if the neutral rate is far below the current Fed funds rate? And if that is the case, supposing, the neutral rate is it's a theoretical concept, right? But suppose the neutral rate is far below the current Fed funds rate, then even dropping interest rates by 50 basis points might not be enough. And rather than a second wave of inflation, you end up worrying about deflation. So those are the two things, to consider, and we've been talking about them for quite some time. The inflation year over year actually went up this past month, right? You can see it increased from about 3.1% up to about 3.3%. So it actually went up this last month, which is not really great news for the Federal Reserve, right? Of course, the Federal Reserve would prefer for this to get, closer back to their target. So seeing it go back up to 3.3% is obviously not ideal. My interpretation of that data point is that it's insignificant. And I would also argue that the bond market agrees, because while headline inflation, headline CPI did come in hotter than expected, the bond market has not seemed to care as the long end of the yield curve continues to drop. So I think that if it were significant, if it were a significant data point, I would suspect that yields would not have reacted like this. Look at the 2-year yield this past week. I mean, it dropped 5%. It was at 4.391, and then it now is down to 4.148. So if I were looking at the chart, only at the 2-year chart, I would not necessarily assume that inflation came in hot this past week. This looks more so like investors are more concerned about how much damage the Fed has done rather than being too concerned about whether they've done enough. That's my interpretation of what's going on. Now, this is the 2-year. You could also go look at, say, like the 10-year. You can see that it dropped this week as well. Now, of course, on a single week, who knows, right? Maybe next week is when the yield curve reacts to it in the opposite manner. But I still am of the opinion that it's an insignificant data point and that we likely will continue to go back down. Now, we could look at the monthly change. I mean, you can see it's actually been quite noisy recently. We could look at a 3-month moving average, see that we were dropping pretty consistently, and we're still technically dropping if you look at a 3-month SMA. But rather than just say, hey, I think it's going to keep dropping, right? And if you look at a 3-month moving average of inflation, you can see that it has continued to slowly drop. And we know, we talked before about getting that last percent to go from 3% to 2% is going to be the hardest percent to get. But rather than just say, hey, I think it's going to go down, let's actually understand why it is likely going to continue to go down. And to do that, I think we need to break inflation down by category. So if you look at it by category, what you'll see, we have all these different categories, right? So this is headline inflation. And yet this is essentially what we just looked at, right? You can see it's back up to 3.3%. But why is it still 3.3%? Because you have some categories that are very low. Food and beverages is still somewhat elevated, but it is getting closer to their 2% objective. It's currently at 2.71%. So food and beverage inflation is almost to where they want it, right? About 2% or so. Housing. This is something that I've said should help continue to push inflation down as the months go on, because housing is very much a lagging indicator. And you can see that it actually dropped from 5.2% down to 4.8%, right? So 0.4 drop in a single month. you look at the monthly change, you can see that, and let's take an average of it, 3-month moving average, housing inflation has been slowly going down. That does not mean deflation. It just means you have disinflation, meaning the rate at which inflation, the pace of it is dropping, right? So rather than going up, say 8%, 7 or 8% in a year, now it's only going up 5% or 4%, right? So that's why it's important to look at this, is because look, it has been dropping, and this is a pretty big drop. And I suspect that it will continue to drop like that. If you look at prior periods of inflation, you can see that housing is very much a lagging indicator. Compare it, say, to food and beverages, right? So if you look at food and beverages, you can see how it tops out a lot sooner than housing does. But housing continues to plummet well after food and beverages has already come back down. You can also see that once it starts to plummet, it can go pretty quickly, right? I mean, it can drop pretty quickly, all things considered. So I still think that housing inflation will continue to drop. You can see this cycle, food and beverage inflation topped out first, then housing. Because housing is lagging, I think it's going to continue to provide a headwind for CPI. Therefore, I think inflation is still likely going to go down. So that's housing. We also have apparel, still down at 1%, right? So basically where it was last month. So that still looks fine. You also have transportation, which has it's back to about 2.63%, but it's been basically hanging out, at fairly low levels since March of 2023. So that one's hasn't really been that concerning. Medical care was deflationary. Now it's back to being pretty low inflationary, 0.445%. You have recreation. This is one that is still somewhat elevated compared to some of the other ones that are basically near zero, but it still has been coming down, right? I mean, like a few months ago, it was at almost 4%. Now it's down to 2.71%. Applying a moving average to it, 3-month moving average, you can see that it's just been steadily going down, right? So the 3-month estimate of this in April of 2023 was about 5%. Today, it's about 2.8%. So it continues to drop. Education and communication is currently deflationary. Other goods and services is one of the ones like housing that continues to stay relatively elevated, currently at 5.5%. Now, if you look at this one, you can see that it has a history of being stubborn, and then when it drops like a rock, right? Like look over here in 2009, you can see that it was still high, and then it just cratered, right? It just cratered and dropped fairly quickly. And then you can go look at over here during the dot-com era, November 99, it was still relatively elevated at around 9.3%. And then in 1 month, it dropped all the way down to 5%. And then the month later, it dropped down to 3.64%. So this is one of those ones that like it can basically do nothing for a long time and then just fall off a cliff, right? Here's another example of, it being at 12% back in the early 80s and then going in 1 month down to 10.5%, and then a month later, 9.5%, then 8.9%, then 8%, then 7%, and then getting into the 6s. So it can drop quickly once the drop begins. Here's one more example, 10.5%, 9%. Maybe that was one we just looked at. But I mean, you get the idea, right? I mean, a lot of these, some of these, once they start to drop, they can drop relatively quickly. So when you look at all of them combined, right, if you just look at headline inflation, it has leveled out here some. And I'm not saying that it can't remain at 3% for a while longer. What I am saying, though, is I think it's more likely to continue to go down than up. Looking at a 3-month estimate, kind of looks like it just popped up a little bit, and then it's starting to roll back over and head back down. And remember, the Fed has not even lowered interest rates yet, right? They haven't even lowered rates yet. And so that's another reason why I suspect it will continue to go down. But in terms of understanding how this actually affects the CPI number, we should note that each of these categories have different contributions. Okay, so they're not all weighted the same necessarily. And one way that we can visualize that is by seeing over here that a lot of the categories that made up a large portion of the CPI number now basically are pretty flat and not making a big move. The largest contributions are coming from housing and food and beverages, right? You can see the percentages here on this little table. So food and beverages is making up about 0.389 of the 3.3. And then the housing is making up over 2.14 of the 0.33. Of the 3.3. So you can see the way it's weighted, housing is making up a very large percentage of it. And if we think that housing inflation is going to continue to drop because it's a lagging indicator, then it would suggest to me that headline inflation is likely going to continue to drop. The other category that is contributing the most is food and beverages, and that's still at 0.4, which is a considerable amount for that single category. But again, if you look at food and beverages, it has been going down, right? Like, it has been steadily decreasing, and I would expect this trend to continue. Now, one thing about this trend, though, is that while it has been going down, the rate at which it goes down has been slowing, right? So, like, it was going down pretty quickly, about, 0.1, a little over 0.1% a month. Now that rate is down to about, 0.0357% this past month. So the rate at which this one's been going down has been slowly it hasn't been going down as quickly as it previously was. Further evidence to suggest that inflation will likely continue to drop, at least in the short term. And by the way, one thing to consider is that you could have both outcomes, right? You could have a period where inflation continues to go down to 2%, and then the Fed pivots too soon, and then we get another round of inflation, right? They don't have to be like one. It doesn't have to be like mutually exclusive. It doesn't mean that you have to get one and you won't get the other. You could have inflation go into deflation. You could have it go deflationary and then still see the Fed pivot too soon, print too much money, and then go back into another wave of inflation. So you could always have both outcomes, right? I mean, you could still always have both outcomes. But one of the reasons why I think it really does still suggest that their inflation could easily continue to fall if you were to look at I wanted to look at which one was it? Wasn't this one? Was it this one? I mean, so this is the core PCE, but we'll be getting another data point there soon. So that one is arguably what the Fed cares more about. It has been dropping, right? It has been dropping. There's also the PPI, all commodities inflation year over year. So this one is at what, -3.22. So that one is still relatively low. And then if we look at the all commodities here, right? Let me just take the year-over-year percentage change, you can see. I mean, percentage change, right? But I mean, this is just another way of looking at the same chart. But you can see that it has been negative since March of 2023. So I still think that certainly a better chance that it continues to sort of slowly go down than to go up too much more. But of course, we'll have to wait and see if that's true. But that basically covers, I believe, the inflation report this week that I wanted to at least talk about. I think there was one more chart that maybe not. Here's there's the core PCE. Here's the PCE price index inflation year over year, and you can see that one's also falling, right? It's back down to 2.64%. So some of them have been going down. There's also the core inflation year over year. So this one still dropped, but not a ton. I mean, it is still at 3.9%. So we'd like to see more progress made on core inflation. On this level, it certainly could get sticky in this area. I mean, you can see that it actually spent a lot of time around this area back in mid 2021, so we'll continue to keep an eye on that as well. Anyways, that's the recent report on inflation. If you guys enjoy the content, again, make sure you subscribe, give the video a thumbs up, and I'll see you guys next time. Bye.